back to The Price of Business. I'm your host, Chris Kelso, filling in for Kevin Price, who's out making the world a better place. Next up, I've got Tim ONeil with State Farm Insurance, one of our regulars here. Tim, how you doing, buddy?
Oh, come right along. How you doing, sir?
Oh, doing very well. Thank you. For all those listeners who haven't heard of you before, let us know who you are and what you do.
Well, I'm Tim ONeil. I'm your co-host on the Real Estate Rat Pack radio show Saturday mornings at 9 a.m., and I've been a career insurance guy, and I'm a lifer, so I've been with State Farm coming on 25 years.
Yeah, and actually, what's interesting, though, is you have your own office, obviously, up in the Kingwood area, but part of that, you were an adjuster as well, so you got to see the good, bad, and ugly of insurance in general, didn't you?
That's right. I learned insurance from the ground up, dragging a tape measure across roofs and through basements, and every which way there was to drag a tape measure, I've drug it. For 8 years, I did that.
Oh, man. And I'll tell you, for all those listeners, I'm a personal user of State Farm Insurance. I'm a personal client of Tim ONeil, and let me tell you, you taught me so many things I did not know about the insurance process, both whenever you get into an accident and just what you need to be looking out for on a year-to-year basis whenever things come through. And with that being said, one of the things that's happening, obviously, is, insurance is something, all types of insurance, whether it be an automobile insurance, a home insurance, healthcare insurance, all that stuff's pretty important to do out there. What's a good topic for us to speak about today?
Well, I was just reading now some projections about the price increases for health insurance both on and off the exchanges. I guess everyone will want to remember that we're now inside of 6 months. The open enrollment for 2017 coverage begins here November 1st, and states are required this week to report their price projections to the federal government as they try to get the exchanges programmed and up and ready so that they'll be ready November 1st for open enrollment. And you start to hear some of the rumors and suggested increases, and they're talking about some really eye-popping numbers. I'm reading between 8 and 10 and 12% increases and up in a lot of market areas, both on and off the exchanges, as insurers struggle to try to make sense of the new reality under the Affordable Care Act. So there's a lot going on out there that we could talk about on that subject if you want.
Well, and I think it is a good subject because, one of the things people sometimes might look at State Farm and just think auto insurance or home insurance, but you do a lot of other types of insurance. We've talked about disability insurance, both long-term and short-term. You do a lot of other insurance and provide a lot of other services that individuals don't realize.
We do. That's been our company's marketing approach for a long time, is to be a multi-line one-stop shop for as many needs of that our customers have that we can find a product for. It's good for everybody. It's good for the company, good for the customer, good for the agent, because frankly, from my perspective, if somebody has 6 or 8 different types of policies with me, it's very difficult to switch. If somebody just has one, let's say I just have their auto insurance or one little policy, somebody sends them a postcard in the mail and can save them $3 a month, it's mighty easy to switch a one-policy household. You just call up and you switch. But if you have 6 or 8 policies that a competitor has to match and beat, then it becomes very difficult, and we call that insulating the book of business. So the more business you have or earn, you do earn it. They don't give it to you. So the more business you earn with a client, the more insulation you have, and the more difficult it is for a competitor to pick that client off. So that's our bread and butter.
And and a 12 to 15% increase. Let's talk about insurance. Let's talk about health insurance at this point. A 12 to 15% increase is quite a bit, by the way.
Yeah, it's several multiples of the base inflation rate in the economy, and healthcare has been outstripping basic inflation for many years, and is continuing to do so. And the things that I was just reading about today was all very interesting because it was only 2014, 2013 when the exchanges rolled out, and there were a lot of protections built into that program for the insurance companies to entice them to participate in the exchanges. Basically, long story short, there was a lot of backstopping going on where the government was agreeing to cover unexpected losses and leave quite a lot of money in the system to compensate insurance companies who got it wrong and maybe projected poorly. and wound up losing a lot of money. Well, for these last 3 years, the government has been covering those losses, basically, and those programs are ebbing out to where it's not going to be like that anymore, and the insurance companies who are participating on the exchanges and all through across the individual health insurance market are going to have to, sink or swim on their own without those backstops. And so as they transition from that backstop arrangement to the sink or swim arrangement, they're taking a much, much harder look at rate increases. And, it's a middle class squeeze because no matter how high the individual rates go on the exchanges, the people who qualify economically for premium support from the program are basically immune to those increases because the premium support that they get from the program will go up to cover the price increases. But it's the middle class, people like our listeners and a lot of self-employed individuals, small business owners who don't qualify for premium assistance and are paying the full rate. These increases are going to be very serious for them.
And and the find I found disturbing about it was obviously, when this was put out there, it's like, hey, we want to give more, we want to give health insurance coverage for more Americans, and by doing so, we should drive down the price of the cost of health care insurance, and that was the driver. It's we're going to, by bringing more people on, it'll drive down the price. And I can tell you, me personally, my insurance has gone up year after year after year. I don't see any type of price release coming down anytime soon, and it's just a shame because, at what point is the breaking point for it not to be feasible? Individuals say, stop. You can't not have health insurance, but at the same time, you can't always be having all your paychecks going to pay for it, because it's becoming so expensive. A 15% increase, that takes a lot of disposable income out of the market.
It does, and remember, it's not just the monthly premium because a lot of quotes that I'm preparing for clients and potential clients can be anywhere, $500, $600 a month premium and a $6,000 annual deductible, which is basically another $500 a month on top of the premium by way of a deductible. So, it sometimes gets to be a hard sell, and customers will look at me across the desk and say, wait a minute, at $500 a month, and then I still have to overcome, a $5,000, $6,000, $7,000 deductible before, any dollars, switch hands. So the discussion that we then, have to have is, hey, listen, this is not, basic coverage for, athlete's foot and upset stomach and an earache. This coverage is for dread disease, and if you get that horrible cancer diagnosis or, get a catastrophic injury in a car accident or something like that, well, then you're very happy because, your $6,000 deductible is met before you get out of the ambulance. And then all of that hundreds and thousands of dollars worth of, bills are all covered. And that actually kind of segues me into another point that I think people don't understand about one of the other drivers of this coverage, because one of the mandates in the Affordable Care Act was the elimination of any and all annual and lifetime caps on policies. Historically, you had a $1 or $2 million lifetime limit, and that was enough for the enormous majority of people. But there were instances where people who had catastrophic illnesses and they would exhaust their $1 or $2 million lifetime limit. And from an actuarial perspective, it's a lot easier to come up with an affordable rate for a policy that has a limit. But when your limit is infinity and there's no way to know, it's one of the other great big price drivers is the elimination of those annual and lifetime caps. I used to be able to sell a policy for someone who had no health insurance. It might have had a $500,000 annual limit. And they were happy to have it because that's a lot of money, and you'd have to get pretty sick, pretty badly injured to where you would start to approach that $500,000 limit. And so these people were very happy to have that policy, and it gave them some peace of mind and some economic security. But
nowadays,
the mandate eliminated all of those type of policies, and now everything is unlimited annual and unlimited lifetime benefits. And that's a big price driver.
Well, Tim, how can we reach you? We're coming up against time in this segment. I want to be able to reach you. I want you to say your phone number two ways, the regular way and the sports way, if you don't mind.
Oh, yeah. The regular straight-up number is 281-358-4444. That's the Kingwood Exchange, 358-4444. And for baseball fans, you will recognize those numbers when I say 281, Ruth DiMaggio Berra, Lou Gehrig, Lou Gehrig, Lou Gehrig, Lou Gehrig.
I love that so much. That is the great Tim ONeil with State Farm. Again, you can reach him at 281-358-4444. If you need any type of insurance, you need an auto loan insurance for your home, for your car, you need to look at getting health insurance or disability insurance, give him a call. Thank you very much for being on board today, Tim.
All right, brother. My pleasure. Anytime. Thank you, sir.
For all those listening to The Price of Business, we have to take a break, but stay tuned and we will be right back.